It's in here, doesn't it?
Good evening, everyone. It is now 6:30, and I'll call our work session to order. We have two items on our work session this evening, and the first one is the Audit Committee report. And Mr. Jim Eichten is going to be presenting that. He is our auditor from MMKR. Jim, good evening.
Mayor?
And you know everyone around the table.
I think I've met everybody.
Yes, you have. This is not your first rodeo.
I've been here a few times. I even got to see Dan earlier. We chatted over coffee or...
I went and got lunch and dinner at the Buzz Cafe, and
There I
he,
was.
And Jim was having lunch.
yeah, he tried to beat traffic and get down early. It's still,
Traffic's kind of rough, so you got to leave
Yeah.
enough time so you're not late.
Good.
Which I'm not late.
And
Thank you.
Kelly Stry, our finance director, is here too. Okay.
Great. Well, I'll start
You have
in.
the floor.
That's okay. Great. Thank
Yes,
you.
please.
My name is Jim Eichten. I'm with MMKR CPAs, here to provide a presentation of the annual audit of the city for the year ended December 31st, 2014. I do have a PowerPoint presentation that hopefully works. So I'll first start off with the presentation of the role of the auditor. The city is required by state statute to have an annual financial statement prepared. That financial statement is required to be prepared using generally accepted accounting principles as well as governmental accounting standards. The financial report is then required to be audited by a independent certified public accountant. And as part of that process, the accountants or CPAs are following a variety of standards in completing their audit, which are guided by national standards and local standards and standards that apply to your particular situation. My PowerPoint goes through those particular items. We provide an opinion on the financial statements. We test the controls over your financial statements as well as the compliance with the regulations that relate to that financial statement. We also audit your compliance with Minnesota legal laws. Those laws that we test are guided by the Office of the State Auditor in the state of Minnesota. She provides, or her office provides us with a list of the laws. We don't test every law, only those laws that they provide a list of. And then lastly, we would be required to audit your federal awards under the guidance of the single audit if you were to receive more than $500,000 of federal revenue on an annual basis. In 2014, you did not. So we did not complete that particular portion of the audit. It was not required. So as part of the audit, we provide a series of reports. Those reports have been distributed in advance of this meeting. We also prepare an annual a management report, which provides a summary presentation of information that guides kind of the required communications that we're required to report, as well as provide some summary information on financial results, as well as future accounting and reporting issues. And I'll cover some of those as part of my presentation that are most important to the city. So in my management report, we do list the audit opinions and the results of the audit. You can see in the PowerPoint that we were able to issue an unmodified opinion on the city's financial statements. You may recall that word has changed. It used to be unqualified. It's now unmodified. It is a clean opinion. It is the opinion that you were looking for from an auditor. Ultimately, in terms of the audit process, everything was very smooth. It was planned accordingly. The scope of the audit did not change throughout our process. We really had a very efficient process, and everything went very smoothly. I mentioned the other reports that we issued. We did not have any findings to note on those reports as well, both from the internal control perspective or the legal compliance perspective. No findings to report this year, an exceptional audit result this year. So, as I mentioned, we do also issue a management report that goes through a lot of other items. As mentioned, it talks about our responsibilities as an auditor. I mentioned that the timing of the audit was complete with the City Council's acceptance at a meeting. Certainly the reports will be submitted to the Office of the State Auditor on a timely basis again this year. We also go through a formal required communications information in that document, and nothing of note to report in that area. So In the first part of the audit, we talked about the compliance and the city's compliance, and certainly very positive results in that regard. The second part of the audit is really how are you doing financially. The management report starts to touch on that information by delving into the property tax overview for the city. We start a property tax discussion with property taxes as it relates to market values. In the management report, there's a couple of graphs on market values, and you can see on the graph on the PowerPoint that market values have been declining since roughly 2009. They started in 2009 and really have been declining all the way through 2013. Yeah. And you can see for the taxes payable in 2014, market values started to increase. Item of note that particular date and time for this particular presentation is actually January 1st of 2013. It is the date they used to calculate property taxes payable for 14. So you can see at that point in time things started to get better in terms of property values. They increased about 2.4% in 2014. For comparison purposes, actually, the city, your city, in terms of our clientele, is one of the few that is actually increasing in 2014. You'll see that many of our cities actually it's started to flatten out, but you see very few that have actually seen that level of increase in 2014. They've stopped declining, but to increase is another matter in terms of our clientele. So that's a positive step in the right direction.
Why is that? Why is that different from other cities that are your client base?
Anybody?
Madam Mayor, members of the council, I don't know that we know specifically. We've had greater residential increases than some other communities have, and so I think maybe that's certainly a piece of it. It's a good indication of things.
Because when you're looking at data points for indicators of the value of the city increasing by 2.4, that's great.
We certainly had some large investments in like the hospital that that kind of large project tends to make people want to invest in a city as well. So
it is definitely a very positive indication. It's ultimately why I brought it up, but in that your economy started to improve faster than some of the neighboring communities. So definitely there could be a variety of reasons for that, definitely.
That's good.
So the next graph we talk about on that in our management report, we use a graph here that shows average tax rates that are used to really, on our end, to compare your cities to other cities. You can see the average tax rate of the city is very comparable to other cities, both in the state as well as the 7-county metro area. In total, your average tax rate is quite a bit lower than the other cities in the state, and most of that relates back to the county's tax rate that is being used. So that's we use that particular rate to also then discuss revenues of the city. So in my report, we talk about revenues on a per capita basis, and this particular presentation reflects governmental funds, which is the general fund, the special revenue funds, the debt funds, and the capital project funds of the city. The first item of note on this particular graph I'd like to point out, albeit that the city's average tax rate is very similar to other cities, you can see that actually generates a higher than average property tax revenue per capita. What that means to me as an auditor is that your property tax base is a good one. It generates appropriate tax levels, probably better than a comparable city in that regard. In total, the annual revenues of the city on a per capita basis was $822 for 2014. That compares to $876 for other city of comparable size in December 31st, 2013. So very comparable. You can see on that particular graph in 2014 that one item stands out, and that is in the other category. In other, the city did experience a significant increase compared to 2013. That actually has to relates to the investment earnings, or maybe the change in fair value of your investment portfolio. In 2013, if you remember, there was a downturn or a paper report of a loss, and that turned around in 2014, which is showing up on that particular graph in the other category. So all in all, they're very positive.
Dan.
Yeah.
Question on the special assessments. We compare ourselves a lot to other cities when we're doing special assessments, and we generally are lower. This makes it even more significant. We're half of what other comparable cities. Does that reflect, for instance, the special assessments for street improvements and the level that we as special assess compared to? We use examples like Edina now and then, where they get clobbered because they don't have an ITF. But are there other cities in there that have a similar structure as we do with the ITF that handles most of that?
Not that I can think of offhand. I think your comment is well taken. It does usually reflects the nature of financing that the city takes when you look at the graph. And some cities tend to use special assessments more than others, and it really comes down to a philosophical decision, not a right or wrong from my point of view. It is just more of a comparable.
Yep.
And that has a reflection on our debt also, and you're going to be covering that.
I will.
So,
I will be.
because
I did notice when I was talking about, when listening to your question, you can see also one other kind of comparable that people like to use when it comes to revenues in the tax increments. There's a philosophical decision-making that goes on with tax increments. And one item there, you'll note that tax increment revenue went down quite a bit in 2014, and that relates to a tax increment district that was decertified.
Decertified. Two.
Two of them?
No.
Tax increment district number 2. Right, exactly. So it's just more of a, wow, what happened there kind of question that I wanted to point out. So the next graph, as you were referring to, talks about expenditures. So expenditures in the governmental funds. This particular graph breaks it down into current expenditures, capital, which can go up and down, fluctuate based on project, as well as debt service, which is certainly a big portion of the governmental funds. You can see there that the overall expenditures in the city on a current basis are very comparable to other cities statewide. 2014 expenditures were similar, or increased a little bit, but certainly in relationship to the budget that was adopted by the city. One item that you see on the page is a bit, I guess, it is significantly skewed, is the debt service number. You can see in 2014 debt service on a per capita basis increased by almost $60-some dollars. Now that had to do with a current refunding bond that was paid out of current obligations, and there was really debt issued and used the next a month later, maybe it was 2 months. And it's skewing the number, frankly. If you take that refunding out of that particular equation, you're back to the $103 to $100 per resident. I would fully expect that would be the case again next year. So when you look at it, from my point of view, that is an important number, though. It does reflect that the city's managing its debt properly. Yeah. You're spending about $100 per resident in debt service when you compare to other cities at about $140 per resident. So certainly a positive trend there. So we also talk a lot about, I'm going to go into the next one, in our discussions, the financial position of other funds, specifically the general fund is one that we always look at. You can see on this graph the city's general fund financial position in terms of the fund balance. The cash balance has always been adequate. It meet or exceeds the fund balance policies, the fund balance goals that the city has adopted for the city. The end of 2014, the city's unassigned fund balance represented about 55% of general fund expenditures for the year. The policy requires you to maintain a balance of 35%. So certainly those that fund balance levels will get into the discussions as you talk about future budgets and how you're going to manage those particular fund balance positions. And I think that's on the agenda after me.
A little bit later.
So we also like to talk about in our report some of the other factors, and this graph maybe doesn't reflect it as good as I'd like. But we also talk a lot about in an audit, at least I look at, well, how's the city doing compared to its overall budget? A auditor looks at that in essence to give some sort of representation back to the council that the information that you're getting on an ongoing basis is actually going to hold true. It's going to hold true to form. If you have a budget and the financial results are mimic it, you can make proper decisions as you're getting and receiving information. In 2014, the general fund revenues were over budget. If you exclude the investment fair values, we're over budget by about $160,000. $160,000. I mean, I forget the number. We were talking about this. I'm going to look it up because it's phenomenal. $38 million budget the city has overall, and the final revenues were within $160,000 of that budget that was put in front of you. Really reflects on the nature of the projections that you're getting and the final results mimicking what's actually being put in front of you. So certainly a very good job, great job, in fact, on the revenue of the city, or the budgeting, I guess, of the city. So then we also talked about expenditures. Expenditures were less than budget by about $800,000. Certainly, almost the exact result you want to see. Revenues being slightly over budget, expenditures being less than budget. Kind of an auditor's dream, I guess, right there when it comes to results.
And in reading all of this, thank you to our staff because in reading the CAFR, it was across all departments.
Yes. Yeah, that dollar amount, the 800-some thousand, is not within one particular category. You really can look at each individual category and see small amounts. Public safety probably stands out the most. But again, within public safety, you have several categories within it. Inspections and police and fire kind of spread out amongst all of those departments. So again, exceptional job within the budgeting of the city. So continuing on, we also talk a lot about the other pretty significant funds of the city, and those are the enterprise funds. You can see here, this is a graphical presentation really of all of the funds combined. In total, the enterprise fund balance increased about $700,000. Some funds are increasing, some are decreasing. Some of the more significant ones, certainly the stormwater fund, is having an increasing fund balance. We do have some individual presentations. I'll show some of those. The first one being the water sewer fund. So when we look at the enterprise funds of cities, one of the focuses that we look at, and you can see it, I guess, pretty well on that graph, is the relationship of the income to the operating income ultimately prior to depreciation. There's a philosophical approach to funding enterprise funds. Some develop rates based on, fully funding depreciation. Some develop rates based on, we'll not fund depreciation. And we really show that both of those on this particular graph. In this particular graph, the purple line is prior to depreciation. You can see certainly the operating results of the water sewer fund are very positive and have been for many years. This particular fund did also see an increase in revenues this past year due to some of the increase in rates that took place. That can also be said for the, boy, you did skip by one of the best ones. I didn't put it in the top there. Oh, well. There is a presentation of the stormwater fund in the management report, and that it is right there in your paper.
It is.
But certainly the stormwater fund, as I showed earlier in the presentation, has a very good operating result this past year. So the one on the presentation above is also a presentation of the Ames Center, the operations of the Ames Center. The past 5 years are presented. You can see that we show revenues increasing significantly in that graph in 2014. It exceeded almost over $1.75 million in revenues. Certainly expenses go up as it relates to that. You're going to have costs as it relates to those revenues in terms of those events. Certainly you can see revenues increasing at the Ames Center. You can also see the impact of that on what you would call the bottom line. The operating income, in this case, it's operating income before depreciation, the purple line, has gone above zero. And actually, I believe it's the last second year it's gone above zero. And so certainly the positive, you see positive trends when it comes to the both the operating income lines, but also the revenue lines of the Ames Center. So so very,
For a
very
new business in 5 years, and it's showing,
great.
yeah.
Excellent. Very good. So I'm going to move then to the kind of the end of my presentation, where there's a number of other presentation or other discussions of enterprise funds. But in my report, we also talk about other information. We have government-wide financial information in there. We have legislative information. There's been a lot of talk in the news about some of the legislation. I'm not going to get into all that, but we do summarize some of the legislative updates in our document. The last thing I want to talk about accounting and auditing update. Hopefully, I have. Oh, there it is. One of the future accounting issues that's going to hit the financial report for next year is a new accounting standard, Government Accounting Standard Board Statement 68, on pensions. And this particular standard will require the city to incorporate into its financial report any unfunded obligations you have in pensions. A pension plan the city is involved in specifically relates to PERA is one that is most notable when it comes to the city. It will require you to include in your financial report your percentage of the PERA's unfunded obligations. It'll show up in your financial report really on the entity-wide financial statements as well as the enterprise fund financial statements. It will not be reflected within your general fund or any of your governmental funds. What that means to the city is that you'll probably see some different financial report information. You'll see some more data regarding the funding of that pension. But ultimately shouldn't make a lot of difference in terms of how you operate internally. It more or less is a financial reporting change that'll be reflected in your financial report, but really shouldn't have any operational decision-making changes. In fact, even though the financial reports are changing, a lot of the bond rating agencies have reflected to us that they don't see it being really any determining factor in how they would evaluate the city as well. So certainly something that you should be aware of, and you'll see, I'll point it out when we show the reports next year, but it shouldn't be a big impact on any sort of decision making. Yeah.
Okay.
So,
Heather?
Madam Mayor, and I think this is being highlighted because it will be a big number. I mean, and that's, I think, that's one of those things that we just want to make sure that we're giving you the information ahead of time to help you understand why why it's changed, but that really it's reflecting kind of a long-term financial obligation of ours, but it's reflecting it in 1 year. And so that's I'm oversimplifying, but it is one of those numbers that will get some attention. And so we want to just make sure that you have all your questions answered with respect to that. So
That's very good.
One of the to add to what Heather's saying, that is it's a difficult thing to explain in the sense of most financial figures that you have in your financial report are controlled by the city in your own decision making. And in
This one we have no control over. And I think that's good for our residents to hear. This is one that we have no control over.
Yeah, the
But
state
it's
of
going to be
Minnesota.
reflected on our financial statement.
It is. And it's kind of unusual in that regard. And that's why we bring it up from the standpoint of, you should be aware of what's happening in your financial report. The pensions, the PRA pensions are really controlled by the state legislature. PRA themselves are guided by statute in terms of their funding policies. And frankly, they're pretty well funded, better than other pension plans around our country. California and some of the other states that have had bankruptcy. So we should be fortunate, and other states are going to see this number probably larger than ours. It will stand out. So we should count ourselves, it's a positive in Minnesota. So.
Yeah.
So I think that's really the main items I wanted to cover. So I do have a summary report. Certainly I did issue an unmodified or clean opinion on the city's financial statements. We didn't have any findings to report, which is a great result. The city is continuing to receive a certificate for excellence in financial reporting. They received it for last year.
13.
We anticipate that it will be received again next year. Certainly, I've reflected on the city's very solid financial position, and also wanted to reflect on, the continued assessment of the city's financial results, including controls. It's really an ongoing thing that's happening each and every day in the finance department, and certainly as auditors, we ask about those questions, but we also see it. We are getting the information we need in a very efficient manner, and the job of the finance department is exceptional. So with that, I can open it up to any questions.
Questions for Jim? Questions for Jim? Mary?
I don't have a question. I want to thank you for your work, as always. You always give a clear and understandable presentation. I appreciate it, and the document that you submitted was very helpful to me. But I mainly want to thank staff for their work, that we did get a clean opinion with no findings. That is absolutely wonderful.
Yeah.
Congratulations.
Dan?
Thank you. Glad the press is here, and John heard a very good report. There was one thing, when I was reading through this and I read the organizational model, it actually struck me, because it's not something I necessarily delved into or compared us to other cities, other than our structure. But you say the city of Burnsville is organized at the direction of the city manager. As chief executive officer and manager is the sole employee of the city council. That we know. The current organizational configuration is non-traditional and has been described as a molecular model, which seeks to emphasize the relationship of work groups while de-emphasizing hierarchy.
Yeah.
And I think a lot of us just think of city councils and city government pretty much the same, a lot of vanilla, not a lot of disparity between one to the other. But could you explain, by contrast, is there a sister city out there that might not be described this way, that operates very much like us?
Well, now you're going to have to give me a page reference on where.
Oh, sorry, page 13.
Yeah,
This
it's
is
at the
finance-
front.
At the bottom of it.
financial
Yeah.
report, is that what we're-
It's usually, and every one of our, and every CAFR and every budget, it
Yeah.
reflects that. It was in 1996,
Oh, there you go.
Kelly, that we went to a molecular structure organizational.
But- and
And we dissolved all of the silos, and therefore it
Sure.
operated in
It's
that,
sort of,
in that dynamic fashion.
Sure, it's the description given. The organizational arrangement illustrated above is fluid and can change at the discretion of the city manager. The current structure is a result of a gradual evolution over the life of the city and will continue to evolve as needs of the community. So I don't think a lot of us think of government as fluid in its organizational structure. So I just wanted to get your perspective on that.
Yeah, and look, you're talking about the organizational structure. One of the things that stands out to me, and you see this actually in a lot of governments now, you used to see organizational structures were top down, and you see those, of course, but people are going to more of a, like you said, a fluid model. It's more circular. Things move around the circle, and everybody's kind of fluid in that regard. The top-down structure, everything's kind of just, it's stone at the top, and everybody follows
Trickles
the
down.
leader. And this is a great model, and you see this more and more, actually. A lot of our governmental entities that are school districts have this kind of model. You'll see that quite a bit in that realm.
Well, the comments certainly encourage that open, fluid, cohesive working environment. Less hierarchy and more just collaborative work between. And, we knew that. I think we practiced that. But I guess I hadn't read, I'm always skipping to the numbers in these reports, and that one caught me because it's early on in the report. And I never really thought our government would be, our structure would be necessarily described in such a way. But
Go back and look at all of the CAFRs, and you'll find it started in
I'm sure
1996.
it's probably there every year. Yeah,
Every year.
I tend to jump to the numbers and look at the bottom line and look at some of the expenses and revenues. So some of this dialogue isn't what I necessarily zero in on. And so as I was scrolling through, I liked that page 13 organizational. Essentially, that's our org chart, and it's circles and circling a circle in the middle. And so
I'll be the first one
good.
to not take credit for that one. It is the city's model that is put there. But 1976 might be ahead of your time. I can't say I've seen this kind of model been in place
for that
long.
Yeah. But it works, and when you think about it, it has gone through many iterations from having deputy city managers to back to directors and one city manager, and so it's been very fluid to meet the needs of the organization and the community.
Yeah,
So,
it's definitely
yeah.
working for us.
Yeah. Okay. I want to thank our staff, because when you look at everything that's been going on and the financial statement that you audited, they've done a great job. To also have a AAA rating from 2 rating agencies. I want to make sure people hear that. Not too many cities get AAA ratings from both Standard & Poor's and Moody's, but we do.
Yeah.
And then when you go through all of the financials and you read through the narrative and what our staff has done in managing our finances, and to the investment group, kudos, because you made some increases, whereas we had some decreases. But this year, you showed an increase in our investments, so thank you. And then for Jim, to you and your staff, thank you for the work that you do and working very well with our staff. And to hear you say that our staff have been very open, and anything that you needed, they have provided for you, so you can have access to all of our policies and financials to do your work, because you report to us. And then to have a clean opinion again. Thank you.
You're welcome.
Yeah. But to our staff, thank you. Yeah, you guys did the heavy lifting. Thank you. Anything else? With that, thank you so much.
Thank you.
We'll let you go and enjoy the evening with your family.
Yeah, thank you.
Thank you. And then we are, I will ask the council, will you, may I have a motion to accept and adopt the audit that was presented by MKKR?
So moved.
Okay, Bill makes the motion, second by Mary. All in favor, please say aye.
Aye.
Aye. Opposed, nay, and the motion carries. Thank you. And now we move on to the next item, and this is our 5-year financial plan review for 2016 budget. And that's at the end of the CAFR.
Madam Mayor, if
Yes.
it's okay with you and the council, that I will just give a couple brief remarks.
Sure, and then we'll get it to Kelly. So our city manager, Heather Johnston, is going to open this up.
As you can see, what we're doing today is really setting the stage for the budget process. Our work has begun a couple months ago, but we have a lot of work left to do, and so what we are trying to do is give you a sense of where we stand. A lot of different pieces of information come in over the next few months, and so the numbers will change. The other thing that we like to do is get the high-level guidance from you on some of the major pieces of the budget as well, and so that's we don't ask you to adopt the maximum tax levy until September 8th, and the final budget isn't adopted until November 2nd, but we do have a lot of pieces to fit together, and so we'll, Ms. Stroud will go through the process. She'll go and also go through some of the high-level information with respect to the budget pressures, but also what that looks like in terms of a tax levy and other initiatives that you may want to consider as we move forward, and also any other direction that you would provide. So
Okay, thank you.
with that, I'll turn it over to Ms. Fry.
Great, thank you.
Yeah.
If it seems like we just ended the last budget process.
We're always talking about budget, Kelly. We are never out of talking about what's
That's correct.
what we have.
Yep. And really, this budget, the point you're at here, is kind of a continuation of what we finished in December as you adopted the 2015 budget, because the 2015 budget included 5-year projections out into 2016 and beyond. So we start with those 2016 numbers and refresh them where we can, where the information that we know, and start looking at where we might be heading here in this next budget process. So you're at the very beginning of this budget process, although staff's been working for a few months on those projections. They'll continue to work and on the budget throughout the city in each department. We're going to come back in July for a work session. This is one we haven't done usually. Sometimes we've given you some little piece of extra on budget in July, and this year we're addressing revenues and fees. And at your request, we're diving a little bit deeper into maybe some other options for fees and revenues. And then in August, we have a deeper discussion about what the max tax would be. We have to set that by law, what the most you can change the budget downward from that point in time.
But you can't go up.
But you can't go up. And then once we discuss that, then September, you have that to adopt. And in October, we release the virtual open house that gives citizens a view of the kinds of work that each department does and what their piece of the budget is. Mm-hmm. And that will be online, and it'll be on cable TV as well. And then on October 27th, the departments will come back and give you some specifics about each area from each department head. And then in November, you get your very detailed budget workbooks from us, and then we start going through at 2 work sessions on the budget, very detailed presentations on the budget, and finally adopting it in December. So that's the rest of the year, and it's year's almost over. So the purpose tonight, as Heather said, we're looking for some preliminary direction. We're giving you some preliminary things to think about. We look at changes from the 2015 budget estimates and the financial plans that you have, the funding levels, and where 2016 is leading us based on decisions that have been made in the past. We'll talk about service level or pressure changes, and then ask about policy direction from you. We're kind of hitting some of the same topics as Jim talked about in the historical, but as we're looking at the budget, that AAA bond rating is really a great place to start for our city. That is the best, and as Madam Mayor mentioned, it's both Standard & Poor's and Moody's also gave us a surveillance rating on their debt, and or the debt covered by their ratings, and both reaffirmed their top ratings. And the basis for your strong financial management really begins with this budgeting process, making decisions that are based on the long term, not just what's good for next year, or to keep to make a decision just in the vacuum of keeping a tax rate low this year, but pushing, kind of kicking the can down the road. You haven't done that in the past, and that's really done well for the city. We have the 5-year financial plans for all the funds that the city has in your budget. And this is actually the 12th year that we have been doing that. So we really have a lot of history, and it really makes the budget process run a lot more smoothly because we're not starting from scratch. We're starting from a place where we've made some decisions in the past. The city's outstanding debt remains low. You've continued to fund the street reconstruction using PAYGO funding and the Infrastructure Trust Fund, and the dedication that you've made to that fund allows you to do that. And it also, the stable fund balance and cash position also puts us in a good spot for this budget process. Behind all of that is your financial management plan. Mm-hmm. That's in your budget document every year, and at this time of year we also bring to you any changes that we might propose on that. It has, I believe, 10 areas. something up around there,
Yeah.
that it addresses and provides that framework for making the decisions. And at this time, staff is not recommending any changes to the financial management plan. So a good place to start the discussion this evening is the 2015 adopted levy and where we are in 2015. If you don't act in the budget process, your 2016 levy will remain the same as the 2015 levy. You can see in the pie chart, the majority of the tax levy does go to the general fund, and then the next largest piece is the ITF fund. And then we have a couple other funds, the forestry, the debt service fund, and the EDA fund. As a point of reference, a 1% increase in the levy is going to be approximately $300,000 in the levy. So I think that's a good thing to keep in mind as we talk about how much it takes to make a difference in that percentage. The legislative session is always something that we look at and what kinds of effects might be happening for us in the next year. We are still feeling the effects of the minimum wage increase. If you remember, we had a partial increase for our seasonals. We were below the new minimum wage, and that was a phased-in process. And in 2015, we have a partial year of phase-in because the next step starts in August. So 2016, there still is a bit of a tail to that that will increase our budget approximately $50,000 for seasonals. Affordable care continues to have some impact on our health insurance plans and also reporting requirements and workloads in the HR and payroll departments. We anticipate increased funding for health insurance consistent with increases in the previous years. Oh, I went too fast. Recent news, there is a possible special session, likely. There was no tax bill, and therefore there are no levy limits at this time for 2016, but with the special session, you never know, that could happen as well. For the general fund, sources of revenues, this is similar to some of the information you saw from Jim, but what we're looking at for the general fund, the majority of the revenues does come from the property taxes, and the next largest from charges for services. That would mainly be our EMS fees that we charge for ambulance, and engineering charges to our projects. Those are probably some of our larger ones. And then you can see the other pieces of the pie being licenses and permits and small intergovernmental other, and then we have a small use of reserves. In license and building permit revenue, that is one of the more volatile and unpredictable revenue sources. As the economy develops or continues and development drives that revenue source, so we try to stay conservative on those estimates, but we have seen some significant increases after some declines, and so that we'll take a hard look at as we go forward in the budget process. The discussion I mentioned for July 14th will address revenue and fee options. Every year, as we set our revenues, the departments take a look at the fees that they charge in each of those areas, and they are looking at the market for similar kinds of fees, and we're targeting the upper quartile, and this is in your financial management plan fees, charges, policies. We set the maximum set by external sources, such as the building code or other legislation. entrepreneurial approach and recovering cost of services. Those are where we have a program that costs us to run. We're looking at those costs to run it and making sure that we're recovering costs for users as appropriate. And then utility fees for our enterprise funds are done on an annual rate study. We're looking at all of the costs that are feeding in there and replacement. And as Jim talked about, there is a factor for depreciation. It's actually more on the side of replacement needs. And we're looking out not just the 5-year CIP, not just 10, it goes 30 years out there. Our engineering department, Mr. Albrecht and his staff are looking way ahead on those. And as we look at use of funds, in the general fund, the majority of the costs are personnel related, wages and benefits. We are a service organization, and the services that are in the general fund are those that are provided by people. Police and fire, and those are the majority of the costs. So when you look at controlling costs and changes that can be made, there's a big chunk of it that is just strictly on the personnel side. Then the next would be the current expenditures. Those are things like supplies and repairs and maintenance, fuel, vehicle maintenance, utilities, training, all those kinds of things take up that red piece of the pie. And then the transfers to other funds, some of your adopted plans, the tax levy is in the general fund and then gets transferred out to those other funds. And those would be things for capital funds for equipment replacement, IT, our parks capital, and some of our special revenue funds. So the preliminary budget projections that we have indicate that we're looking at a 3.7% increase based on current services that we have now, so the costs of doing the same things that we've been doing. And then the adopted plans, the 2016 amount in the adopted plans. This is down from November. We were expecting 4.6 during the last budget process for 2016. The major piece of this is that we had a large debt service increase related to Cliff and 35 interchange, and that project has been delayed and will change. So that has changed this 2016 amount. And there are a few, we've made some other refinements as we go here, but that would be the largest piece.
Steve, when are you anticipating that Cliff interchange? Is it going to be with the same time the bridge comes online or before?
Well, the Cliff interchange itself, I think we're talking about the city's portion of the interchange.
Yeah.
It'll really be timed with redevelopment in that area away from the heavy quarry and garbage uses. Those uses, there isn't a lot of benefit to putting the interchange in for those uses, and so it'll be timed with some portion of large redevelopment. So I think we'll talk about it with the CIP this fall, but the recommendation for the council is we know what our strategy is and our plan is we will have a project floating out in the future waiting for that opportunity, and at that time when it makes sense, we'll look at our funding mechanisms that would generate revenue through that redevelopment process to help fund that. But in the interim, we talked about the interim improvements. The city's applied for a host fee grant again. This year will help with some resurfacing and some more permanent interchange controls. We have enhanced it greatly with the work that the county and the city did as part of the 13 and 5 project. We made some interim improvements. So we'll continue to make those little interim tweaks. And then we'll also bring to the council this fall with the CIP potentially some things to position us. One of the things would be to acquire the right-of-way necessary for that future interchange so that we have it. That's really the thing that's out there that could go away because it is on a parcel that could redevelop at some point, and so we do want to at least secure that at some point in the future.
Yes. Well, because there was discussion at one time as the bridge gets reconstructed that might be an opportunity to do some work with the interchange on Cliff.
They're not going, doesn't look like the bridge construction will go back that far, and they were looking at two things. One, they would be southbound 35 potentially because you're going to increase capacity. We could see more cars going on the off-ramp, and that could exacerbate our situation. Okay. The other was they were looking at whether they could find funding to help clean up northbound, where we have the you hear the accident reports in the morning, Black Dog, Cliff Road. And so the state is still looking at that. The flood mitigation is still on the table, so that's an important part, but the roadway itself may not get reconstructed all the way back to Cliff, and so that would probably eliminate any interchange improvements at Cliff on the northbound side.
Okay. Well, if the state and the federal government can help us, that would be good too.
Yeah, it's a substantial project. It's a $140 million project without any improvements to Cliff, and so we're hoping just to get the flood mitigation and the bridge improvements done. So. Yeah. But we have made a pitch. So
good. Yeah. If you never ask, you never know whether you'll get. So good. Thank you.
So we have much more specific work to be done. However, there's some preliminary estimates of costs that we can dig into here. The top section represents the current services, most of which are personnel, a total of 856 in the personnel. Health insurance and minimum wage changes represent large pieces of that number. Current expenditures are estimated to increase 2 to 3%. The departments will really dig in a lot deeper on that, and they'll bring forth ideas for efficiencies and that kind of thing. But we do have some more work to do in that area. And then we've looked at some revenues and use of reserves and what those might offset. And then the bottom section is your funding plans and how they affect the total. You'll notice that in here there is not included anything for the facilities improvement that have been identified in the facility plan, addressing those separately. So this is the services that you're currently providing and the plans that we currently have. So the projected levy compared to the 2015 levy and the changes by fund, we would have a $25,000 increase in the EDA levy. The debt service will be flat. The ITF levy is scheduled $50,000, and that has been consistent with the plan for many years. And the forestry fund buildup of $50,000 annually. That is for the emerald ash borer problem that may occur or will occur at some point in time. And then that leaves the rest in the general fund. So the total levy increase of $1,112,000 projection at this point in time, which would be 3.7%. The short-term portion of the facility improvement plan would require about a $10 million bond. That would increase annual debt service. If we go with a 15-year debt service on that, would be about a $825,000 addition. And that would be phased in over a couple of years. But over 2 years, that's about 2.7% levy increase.
Okay. And we have a lot of capacity in the debt area.
Yes, we wouldn't reach any maximums or even near them. Yes. So when you looked at your budget in November and we projected out the next 4 years, this is what those levy increases looked like with the 4.6, as I mentioned earlier. And if we compare those, so the same purple bars are the November projection, and the orange bars being our updated projection as of now. You'll see the 2016 is lower, and that was the change in the debt mainly. We did just push that out 1 year to 2017. As Steve mentioned, when we bring the CIP back, that number will actually go into some future years or something. So I don't anticipate that 2017 number remaining at that 4.6 4.
That was
What's the number?
referencing the Cliff
Yes, yes.
TIF bonding that was
Yeah.
in that, so it had been moved out.
Yeah.
Yes, it
Yeah.
moved out, and we probably would look to move it out a couple of years in
Yeah.
the future CIP.
But it's always
as a
good to have it
placeholder
there,
so
yes.
Council's aware and it's on our radar.
Absolutely.
Yeah.
It's always good planning.
Purple as against
Yeah.
orange.
Right.
It's done.
And I think the next time we bring you these projections, we will have a CIP with more solid numbers. We'll project that out in the future years more accurately rather than just moving it out 1 year at this point in time. But it gives you an idea of the pressures of
Yeah.
maintaining those current services with some inflationary costs built in where it would be heading.
Yeah, but the pressures are also the assets of the community that need to be maintained and upgraded and improved. So
And
they're
this-
not cheap anymore.
Nope. This is, with those projected increases, this is where the total levy would be heading. And as you can see, the green portion of the bar is the general fund, or the general levy. And that does represent the majority of it. And you've got your ITF as that kind of base part of that levy. So what's driving the need for the additional tax levies in those future years? Some of the same things that we've been talking about. Cost of living adjustments and steps in personnel costs. Health insurance, those have moderated with this last contract that we have with our health insurance provider, so that's good, but it still is a pressure. And then the phased-in minimum wage has been a bit of a pressure as well. And then the other thing is that as we looked back on that pie of revenues that we have coming in to support this stuff, the services that make up a large portion of the general fund are not those that are funded by other types of revenue. So they are funded by the property tax. So for police and fire and parks operations, street maintenance, there isn't a user fee. That it is the property tax levy that's basically covering that portion of it. Then you have your plans, for your adopted long-term plans, Parks Capital funding. The plan is a $100,000 increase for 2016 and $100,000 in 2017. That restores the Parks Capital funding to where it was prior to the time that there were the large cuts back in 2009 and 10. So that was a long-term plan to build that back up and to maintain that park system replacement schedules that we have, and we feel like we're there. It is projected to level out then at that point in time, or after that point in time. And then the forestry, the emerald ash borer, we do project that there's going to be a very large expense in the future when we do need to deal with the trees, if and when the bug comes. I guess it's not an if.
It's just on the border.
Right.
We haven't found any in Burnsville yet.
So this is a plan that you've had in place to slowly build up a levy that to use in the future, and to use it in as we start to treat some of the trees, which has been happening in the inventories of trees and that sort of thing. And then capital equipment funding, another one where we made a lot of cuts to the funding of that, stretching out the vehicle and fleet replacements as far as we could. This is building that funding back up, so that is an increase of $79,000 as planned. And then, as I mentioned before, the facility study is not included at this time. We'll bring options to you in August with more detail, talking about options for issuing debt and what that might look like. Right now, we're looking at the $10 million bond for the short-term portion of that, looking at about 15 years. and that would be about 2.7%.
Okay.
The other thing that affects property taxes is the valuations and the new construction and what are residential values doing in the city of Burnsville, residential and commercial and industrial. As Jim mentioned, we've had a couple of years, so the numbers he was looking at we're showing you was actually 2 years.
Yeah.
Because now we're looking at the preliminary numbers that we have for the pay 2016 values. We're seeing a smaller increase than last year. But we are increasing, so that's great. Right now, for the 2015 pay 2015 values, we had $5.5 billion of value of property in Burnsville, and that is, or did I say that wrong?
Yeah.
5.4. Now we're at 5.5. About 150 million more than last year. There's two pieces of that. There's new construction. So what did we add? Actual new building and new properties coming online. That it was about $20 million in new construction that came online for pay 2016. And again, there's a lag, a time lag in
The
there
hospital.
sometimes. And we had about $9 million in commercial and industrial, and about $11 million in residential. The rest of the increase in valuation relates to value increases of existing properties, so regaining some of those losses that they've had in previous years. That's a good thing for Burnsville property owners after a long decline in those valuations. The residential market saw a larger decline over the years in the past, so they have they're seeing more of an increase. And the commercial markets have been slower, commercial properties have been slower to increase in value. So as a result, if you look at those two pies, it's slight right now, but there is a bigger piece of the pie in 2016 that would be paid by residential properties. This is another view of it. This is the gross tax capacity by property type, because that's a little different than market value, but you can see that similar trend that residential taking a bigger piece of that percentage. New construction is always something we've looked at. How much new tax base does that new construction provide? And it's about $150,000 for this year. If you were to apply the 3.7% tax rates on the value of that new construction, we're looking at about $150,000. That means the rest of a property tax increase really goes back to that existing tax base and gets spread. That it's one of those more confusing parts of this very complex property tax formulas, but one way of looking at it. This shows you graphically where the changes were, where the value increases and new construction were. Apartments basically held this, did not have any new construction in apartments, but did increase in value 5.3%. The commercial and industrial, the existing properties actually saw a decrease in value of 0.7%. But we had some offsetting increases in new construction. And then in residential, there was some a sliver of new construction and valuation increases on average of 3.7. All three of those bars added together, if you look at the total values added together, total values increase about 2.6% and a 0.3% increase in new construction. Our preliminary calculations look like we will have increase in our tax rate. So the two things combined would be what is the levy, and then how does that spread to the increase in values. So in 2016, right now, we're predicting about a little bit of change in the tax rate. There are a lot of factors that still go into that we don't have all the fiscal disparities and final numbers and all of those things to go in, so it is a preliminary estimate at this point in time. One thing we like to point out is that the change in the levy, so the percent change in the levy and the percent change in the tax rate are not always going the same direction or not the same number. And that has to do with all the different factors that go into calculating how that tax is spread out. But so if we did end up with a 3.7% levy increase, the tax rate is projected to go up about 2.9 at this point.
Yeah. Dan?
Is that a result of that growth in the valuation of the pie being faster, greater than the actual dollar amount that we are levying?
Yes.
So the pie is absorbing, the pie getting bigger is absorbing some of the needed increase.
Yes, but not all of it.
But we only
So-
push.
So kind of back to that other one where it shows that there is some that are going to the existing property tax owner.
Yeah. Yes, it's not necessarily just that 0.5% of new valuation or whatever, or increased valuation by investment, but just the overall valuations going up.
That's right.
Thank you.
So we always try to calculate what does this mean to an average residential property. And we're using the median valued home as Dakota County has told us what that median value home in Burnsville is. We look at the change in that valuation of the median value home. And about 3.7% tax increase, or levy increase rather, would result in about $59 per year to that average property of 200 with a value of $214,700. About $4.92.
Yeah.
So every individual property is going to change differently. It's one of these
It's about 5.
consistent. It's something we calculate to kind of see what the average effect is, but there is no exact home like this in Burnsville. It will vary among neighborhoods and values of homes.
Yeah. Bill?
Just to make a point, that was similar last year.
Yeah.
I think we were at $60. My recollection is about $60 on the average home, even though the value's gone up. And the increase was within that range as well. It was a little higher, I think.
Mm-hmm. Okay. Mary?
And I would like to add that what we're talking here is about the city portion of the tax bill,
Yes.
not the school district portion, not the county portion.
Not
Just
Met
the city
Council.
portion. Not the Met Council, not all those other little
Mosquito control?
mosquito control, all of that. This is just the city portion.
It's a good point.
And
Yeah,
again,
Bill.
just as we drive this home, and that increase, the 6.8% increase factors in the increased value of the average home relative to the value of commercial property.
And this next slide points that out a little bit further. So I've always used this hypothetical $1 million commercial property and what that value would have changed if it were the average and behaved as the average across the city. And in a commercial property, that value actually went down 0.7%. So its valuation would be $993.
Yeah. Dan?
You remember what that chart said last year? It was much more significant than
It was a
7/10.
decrease.
Yeah, it was a decrease of much greater than,
Yes.
I think, 7/10. It was
Yes. And
commercial
the,
industrial got a pretty big break with residential values escalating pretty fast and
In
commercial
the last
industrial
few
flat.
years, the commercial industrial have been taking a lot of breaks. It's
Yeah.
the residential that has been carrying the water.
so in this case, their tax is virtually flat. $4 a year.
Yeah,
33
$4
cents
a
month.
year.
Yeah. So Jim showed you a chart on fund balance, and I'm bringing that one back. This is historical up through actual results of 2014, and then based on the 2015 budget, so what you've already approved. As we talked about earlier, in 2013, we had that decrease that was the fair value adjustment, which was the paper loss that was recognized at the end of 2013, and then that turned, as valuations and interest rates turned around, the portfolio went back to where it was, so that's why you're seeing 2014. We really didn't change any of our investments or make any holding changes whatsoever. It really was a difference in a point of time and what the market interest rates did in that as of that point in time. So the good news is that is back in 2014. So the base, the red numbers are your restricted portion of your fund balance. You can only, that's the landfill abatement dollars. You can only spend that on certain things. We do use a little piece of that every year for a sustainability program, about $135,000 for 2016 is what we're projecting. So that number is we're using that slowly, but there isn't, the expenses that you have within the general fund would not be applicable to use any more than what we have used in the budget. The orange portion is the 35% policy that you have of fund balance. So that is how much fund balance do we need to just continue operations. For the most part, our revenues come in twice a year. That big portion of the pie we get in June and December. So we need enough cash flow to carry us through June when we get the property taxes, and then again in December for the second half. And the 35% is also recommended by the Office of the State Auditor. It's a very common number. It takes us through the cash flow needs of a normal year. Then in your budget process, you have identified some uses of fund balance that you have approved so when we've had more than we feel like we necessarily want to keep in fund balance, you have identified some uses of that fund balance to offset property tax increases or uses of property tax increases. And your policy indicates that the best way to do that are one-time expenditures. So things that are not going to recur next year. It's a one-time use of fund balance. And I have a slide in the future, or a little bit farther down, that will show you those kinds of things that we have identified there. But that's your purple portion. And then the green portion is the contingency. So that's the portion, right now it's unassigned. There's been discussion in previous years of what is the right level of that contingency. So what do we need beyond the 35% that we need for cash flow for those unforeseen things that can happen. The windstorms of the past that we had, a flood, expenditures those kinds of unusual things, or a downturn in the economy as we had in previous years as well. So when your volatile revenues don't come in as projected, like permits or that kind of thing, that if the economy changes, your budget projections change. And that target you've set in the past kind of at $2 million. So you can see that your green portion is well within in that safety net area that you have.
Yeah. Dan?
Question. Many years ago, we started using some of that contingency to pay for the ice center bonds, and I believe it was 1.1 million a year. Is that represented in the purple and offset by something else, or is it part of the green?
It was actually 140,000 a
sorry,
year,
not a million.
1.4 million total.
Total.
Yes, over 10 years.
10-year period, right.
And that is represented in your purple.
Yeah.
So the balance of that, because we are going into the 5th year in 2016,
Right.
so that balance is, you've used it each year, and the balance that you've set aside is declining.
Yeah.
Gotcha. So we're sitting right now, the last 2 years, or projected 2015 budget, to be pretty much the same, 4.1, 3.8, in the funds contingent unassigned. So we're 1.8 million over our 2. Last year we were 4.1. That example of using for the ice center, could that be used in the same way toward the to-be-discussed debt
Facility.
service for the capital improvements to public safety or the buildings, et cetera, the building projects?
That would be an option. It wouldn't necessarily, I don't think we could use enough to cover the whole thing.
But a portion, I mean,
But,
yeah, a combination of things. But there's funds sitting there that if they continue at that same level, just like we made the decision related to the ice center, we could make a similar decision to say, let's use a portion of that because we're always exceeding what we really meant to keep of taxpayer money, and let's use it toward that debt service, along with some other debt service options, obviously the taxation or whatever, to pay for that debt service if we were to choose to move forward with any one of those projects. I'm not trying to say
I
I'm
think that,
advocating,
yeah.
or I'm not picking the projects, but we're going to have that discussion.
We'll see a lot of that
If we do,
in
then-
August.
Okay. If we do make that decision, that would be a resource for some debt service support, potentially,
That's
just as we did. I mean, that was a
Yep.
great model. It was
Yeah.
unique.
Yeah.
We hadn't really thought of it. We'd been very hard line about one-time capital
Yeah.
only, and we were presented an
found a
option
way.
that, said as long as you feel comfortable that our budgeting process will always be consistently, historically, in the past, we've always been able to budget wisely and always come in under budget, that you could sort of, as long as you feel you could, sustain that over a period of time.
That is also a decision that can be changed along the way
Yep.
as well, because you
make those
haven't
policies, we
actually
amend it.
spent the money towards it. So if you were to get into a situation, you could make a choice to raise the levy to pay those at that point in
Sure, yeah,
time.
at any year, we could flip
Yeah.
to fund it differently, right?
That is, yes, but at this point, it is assigned that way, but you do have a choice
Yeah.
to make a change.
Yeah, Heather, I believe those are all the options when you bring the facilities plan before us in August.
Yeah, we'll have a whole number of options.
Yeah.
And you'll also find out in probably about 5 minutes that there are some other one-time costs that are larger
Yeah.
this year, that such as the comprehensive plan,
Yeah.
that may bring some of those numbers down a little bit, but we'll talk about that very shortly.
Yeah.
I thought the Met Council provided funding for us to do that. Are they mandating
Are you-
expenses without the funding to support it?
Yeah.
They
Are you
provide our
dreaming?
funding.
Did you dream this up?
They're providing our funding.
Shame on
too.
them
Yeah.
for
Yeah.
mandating unfunded mandates.
Yeah,
So this is the same chart with some projected
yeah.
balances based on that same 5-year plan that we were looking at. And as Heather mentioned, we're continuing to use some of the purple. And you see the out years are more level than what you've seen the growth in the previous years. And that is because we are conservative when we budget for revenues and budget for expenses. We do expect that we will meet those revenues and expenses. We don't plan to have savings, but we do anticipate, they're conservative, we do anticipate that we will be able to meet those. So here are those uses that right now, these preliminary projections are planning on these kinds of uses. the continued use of the Ice Center debt transfer, $140,000. We're in year 5. Sustainability, as I mentioned, that's use of that restricted fund balance, $135,000. And then the comprehensive plan update. Right now, we have only a rough estimate of how much that's going to cost us, and we're thinking it could be $400,000 over 2 years. So that is definitely a one-time expense that would fit within your policy to use fund balance to do that. So we're looking at $200,000 each year for the next 2 years. Hopefully, we don't know that it will cost that much, but it could.
And Madam Mayor, that's the general fund portion. There are other plans that we have for stormwater and for other that feed into that, and so so the enterprise funds would have some expenses in there as well.
Yeah,
That's correct. Elections, this is something that you've consistently done on the off years or the on years, or rather for elections. We use fund balance to offset the costs of the election. So another use rather than raising and then lowering every other year on the tax levy, keeping that more set. And then we have an option to fund another entrance monument. So we had said every other year, and so $50,000 would be another option.
yeah.
And then during the budget process, we will review what comes forward as the departments look at very specific things and needs. If there are some capital or other one-time expenditures that fit this policy, we would consider bringing that to you for a decision on whether you want to use fund balance for those specific things. So how could we reduce that 3.7 tax levy? The two largest ways to do this fall into two categories. That would be to reduce or postpone your planned funding of all of those different plans that we've already discussed, or reduce services. Certainly staff will dive into current expense numbers and take more precise estimates of those costs that are presented and find efficiency savings. They're very good at doing that, but the limited options, that can provide some relief, but the biggest effect will come from changing service levels. Often those efficiency things that staff find offset those inflationary things that they can't control too, because there are definitely costs that are going up that we don't have control over, and they try very hard to find something else that can offset those items. But your two biggest things are the reducing those planned funding or reducing services. Every year we address whether to transfer from the general fund balance to the EDA fund. You have a policy in your financial management plan that says we'll annually review this, and we don't recommend a transfer at this time. Doesn't seem to be needed in for the EDA fund. We've been talking about general government services, but the other big piece of the city's budget is those enterprise funds, and the largest of these being the water and sewer fund. When you did your 5-year plans last year, we projected what the user fees might be increasing to meet the needs of those funds, and we anticipate that we would stay within those previous rate increases for each of those funds. And so under water and sewer, that increase is projected to be 4.5%, and the stormwater is 1%, and street light 1%. In the water and sewer fund, the meter replacement project continues. That's one of our big capital ones driving the needs. And stormwater does not have any large projects, but they have the same projects we've had in the CIP. I think we'll be diving into that further as well.
And for the council's reference, the last 2 years, I believe, we've held stormwater and streetlight have actually ended at zero when it comes budget time. You'll recall our stormwater fund is healthy, so we have been holding that at zero the last several years. So is the streetlight fund as we continue to program projects. So the 1% is planned because there are electrical and different inflationary factors, but the last couple of years we've been able to hold those at zero. So just wanted you to be aware of that, because when you see that big fund balance in the audit, you think, why would we even increase it if we have the fund balance? Well, we project an inflationary increase, but we have held it flat the last couple of years, and we most likely will continue to do that in stormwater and street lighting.
Dan?
Well, that's great news. Anytime you see an annual increase of 1% or zero in the last couple of years, that's fantastic. If I remember right in previous presentations, the water and sanitary sewer, is that more of a one-time spike because of some anticipated unusual?
Our 20-year plan shows the next 10 years or so, because we're rebuilding the water treatment plant here in the upcoming, over the next 5 years, we have a significant amount of debt that's being issued for the water treatment plant. Right. The other part of it is in about 10 years, the replacement of the water mains that we're having issues with, the cast iron and concrete pipes, is nearly completed, and you'll actually see us able to level out at that point as our debt service starts to drop. Kind of the light at the end of the tunnel on our water sewer fund plan. But what we've tried to do is say 4.5% or less is what we've asked our staff to work within, knowing that we have to replace that infrastructure built in the 70s. Right. But there is light at the end of that tunnel, but it's out in the mid to late 2020s is when we start seeing that pressure on the water and sewer fund drop.
Well, it's not only good financial planning. We're an older city, and this stuff has to be replaced. So, like we are in a phase with our streets and having to absorb significant costs to replace and repair streets that are 40 and 50 years old, and we've got more life out of them than in many cases than we expected. We're into that same sort of capital investment building for the water and sanitary sewer. And I think it's important to note, because now and then I'll get pinged by commercial owners, residential periodically too, about our water rates. And I like to be able to respond with, minus the capital investment, the rate increase might be a 1 or a 2%. But we are investing significantly in capital, which we're about to, take on a discussion with facilities, because we're that old of a city, and it's now time to overhaul a lot of it, and it has costs.
And as we redo streets, that's the time to do it. So as the council's made quite an effort to get a handle on our street situation, when we do that, we do have to match replacement of water mains at the same time, because those same neighborhoods that are 50 years old, the water main's the same age. We don't want to be back there again in 15, 20 years, and so that's why we're replacing that. What we are trying to do, though, is balance out some of the bonding spikes. The years that you'll see as we do the water plant in the next couple of years, we've minimized the streets that have extensive water infrastructure to be done those years. We're focusing on streets that don't have those water main issues, so that we don't have a massive spike that the 4.5% can't handle. And so that's part of the long-term planning strategy we've been talking about. As I said, we're 20 to 30 years out on that water infrastructure and the planning, so that we can start to smooth that out. As you said, we're headed through the peak. When we come out the other side, we feel like we're going to have very level and be able to hold those rates lower at that time.
Great. That's I think no one can argue with an investment in replacing 40 and 50-year-old or expanding, as need demands, capital investments in the city's infrastructure and assets. So.
And our financial plan and our practice has always been to not have those spikes, so that our residents and our commercial.
It's more predictable.
More predictable, and our staff continues to follow in that. And it helps everybody to not see these spikes that other communities experience. Ours is very predictable, and we try not to. So I thank you for that.
And the Ames Center Finance Plan includes a 5-year capital plan, but major capital replacements not funded at this time. But there are some capital.
Time will come where you're going to have to put a plan in place because like any building, whether it's home or any building, you're going to have repairs and replacements.
And it's in our program. We're just not at the age yet that we're seeing those major capital items.
But you're already beginning to, yes, okay, very good.
You'll see elements this fall. The Nicollet Commons Park will move into the capital parks planning for the first time as it starts to have things. Beautiful park, heavy use equals things wear out from time to time. So you'll start to see some of those newer elements as they come into the long range planning. So.
Okay, good. Yeah, Dan.
Did we start funding depreciation on the PAC a few years ago? Many years ago? I can't remember. I thought it was just a year or two ago.
It's 6 years old, so.
Yeah, we're not really funding depreciation. We are at there's some capital items in their capital, but not the major.
Yeah.
Yeah.
replacement
So
items.
we're booking depreciation as shown in some previous
booked-
charts.
yes.
Yeah.
We're taking it, we're just not funding it.
Yes.
Yes.
Yes, we're
Yeah.
definitely recognizing it,
It is.
and
Yeah.
it's in there.
You've been putting it in for the last 3 years, that depreciation is at.
From the
in effect,
beginning.
From the beginning.
It's
Yeah.
actually, it's required
Yeah.
to do, yes.
Yes, we just don't have funding lined up to.
Yeah.
For instance, when the carpet's one of the things that tends to get a lot of wear,
Well, and
That's
with
gonna have
all of those children.
fairly significant price tag on it.
Yeah,
And so we need to,
heavy use.
exactly.
Madam Mayor,
Yeah.
Councilmember Keeley, some of that will be covered in the CIP for that, for
Yeah.
like the water heaters that we've talked about and other
Yeah.
things.
And we've taken opportunities, we bought out the generator and done some things
Yeah.
to save us money long-term when they, strategically at this point, more so than
Cool.
age replacements.
Yes. The plan does fund the things that need to be replaced now. It's not building a fund to replace something a long time down the road. That's really the difference, is that it's operating on what it needs to operate now and replace, and those kinds of things are in there. But not necessarily building a pool of money to do something else in the future.
Okay.
But the elements are in. We have a long-range plan. We've had the facility reviewed by building experts. They've given us a 20-year capital of the things you're going to have to start anticipating. It's just so far out on our capital horizon yet that we have needs in the next 10 years, obviously, with facilities that we have to deal with first, and then that one will come along
Good.
behind it.
But
Thank
it's good that it's on your radar.
It is.
Yeah, I think this city, the staff is very good about taking care of our assets and anticipating when things need to be replaced.
I mean, our facility strategy is going to really develop this year, and then all those pieces will fall together for all of the facilities once we bite off kind of the short-term facility needs. Then things will fall into place as to when we can afford them and when they should be replaced.
Thank you.
All right. And so that brings us to what's coming next in the budget process. So the items in white are your next two meetings, which would address revenues and fees, and then that max tax. And that leads us to asking you some questions for direction, and as we continue the preparation of the detailed budget for 2016, and I think I can turn it over to Heather.
Yeah, I think we're going to go through some of these relatively quickly. Generally speaking, we bring some of these questions back to you later, and in terms usually in October. But what we wanted to do is kind of give you a little bit of a preview on some of them, so that if there's any direction you want to give us now, that we can start moving in that direction. This is the list of the funding, financial plan funding levels. So for these, we're putting them in front of you so you can get a sense of the orders of magnitude, and just getting a sense from you all as to whether you want us to explore any of the implications of delaying any of these further, or if you want to proceed.
Mary?
Well, I think we've devoted considerable time to each one. And I believe we've had consensus that we wanted to continue this direction. And I would not want to see that change at this point.
Bill?
Yeah, and I agree with Mayor. I mean, we discussed this in incredible detail last year, and I agree. As much as I hate to see that we have to spend the money, we
have
see
to.
that we have to spend the money. So.
Okay. Dan?
Well, I did a little math while we were going through this, and I want to go on record early on and not come in late. I want to see a 2% or less increase on existing taxpayers. We can do that by cutting about $350,000 from our budget, which is actually a number that's been done many, many times. That's actually a number that's very achievable. Plus the new, which is 0.5%, plus any debt service that we take on for the investment in our capital. To me, that's a separate issue. That's a separate issue, and it's a separate discussion for the taxpayers to understand why and where that money is going. And so, for me, I look at it as in pieces, no more than a 2% increase on existing taxpayers. Add the 0.5% of new money is 2.5%, and then add whatever we decide as a council that we're going to invest in the buildings, et cetera, from the building study. And if that's like the projected number on 10 million, if that's, what was that, 2.7?
Over 2 years.
Yeah, over 2 years, then it is what it is. But we know exactly what we're getting for that investment, and we understand going in that the cost of that, what that cost of that investment is. And to me, that's different than the ongoing operations or the core fundamental operations of the city and what we deliver in services. So that number doesn't, in my mind, intermix with what the core tax increase would be.
Suzanne?
Well, I agree with Bill and Mary that, I mean, we've talked about this, and I can't see that we can really delay any of these items, and I think our taxpayers expect a certain level of service, and I think we need to continue to deliver that to them.
Yeah. Okay, I understand where you're coming from, Dan, but one of the things that we have been challenged with is making sure that we continue to be good stewards to the assets that belong to the people, and that we have a vital community that people will want to stay here, have their businesses here, and also to attract new residents here. And we have been so good with regard to our infrastructure trust fund, and I agree with Mary and Bill and Suzanne. We have looked at these things for since the recession, and we've delayed things. And one of the things that I don't ever want to lose is that AAA bond rating. And there are other factors that are data points that the bonding agencies look at. But one of the things is that we've been very good about our infrastructure trust fund, making sure that we take care of the assets of the community and continue to make sure that we improve the market value of this community, because that's what they look at. So I think we need to continue to stay the course. Our staff is very good. We're going to go forward with a 3.7%, but I think our staff is very good at always looking very deeply at all of these things. And by December, who knows with the analysis that they will do. But I don't want to tie their hands at any point. Bill?
And Dan, I'd like clarification. Is that a 2% cap on the 2.7% estimate that they talked about on the average house?
I'm looking at the budget numbers, not the ultimate result on a house. Where you have it broken down, I think it's, can you go back to that slide? It's parcels already contributing are at 3.2, so to go down 1.2, it's about 350,000. And the 0.5% is new money. Leave it. We'll take it. Obviously, I wish that would grow even more because that reduces the burden on existing. And then the capital, the new debt service to fund the capital decisions that we make, I treat that as a separate deal.
Yeah.
And it's a separate discussion, and I think it should be a line item that way, you know, for us and for the...
You mean the facilities?
Yeah, whatever we ultimately decide for the facility.
Yeah, and I think that's why it's set aside by staff for a separate discussion, so that's transparent. But this is for everything that we have right now that we need to go forward with.
Sure. I mean, I just want to note, how much was the amount that we carried over from the prior year budget of unspent? In other words, we came in under budget at how much?
Madam Mayor, members of the council, just to clarify that number too, because I know that number comes up, we have to recall that we had, we made some budget adjustments because it's against state law to not spend within your appropriations. And so you all adjusted at the end of the year based on our most recent things, recent numbers. And so there's an amended budget, and all those are against the amended budget. And so I think we want to be careful not to celebrate that number too much, but we can certainly look to see what that was, and we can look to see what it was against the original budget too. We can go back and look at what that was, because it was over.
There were a few unspent items too that you approved as budget amendments into 2015, so there were some savings of the 2014 items that were due to just a delay.
Yeah.
Which is normal.
But you need to take a look at that, because isn't that some of the things that you are counted towards the delay in some activity, for instance, like the vehicle fund?
The vehicle,
a lot of it's in IT. I'm sorry. Go ahead.
Yeah,
No,
the
that
vehicle
guidance-
fund would be a separate fund, different than the other
But we
one
delayed some of that, so did you move some of that?
Yes.
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 But we also had some overspending and overtime in some of our the public safety areas for good reasons, and
That's
so
right.
we adjusted those budgets upward, and so.
Yeah, and I
that
think
would-
it was all that movement, but,
For instance, the large number of snow events that we had caused us to,
Use a little more ice,
yes,
or I mean salt.
salt,
A little more salt.
yes.
yeah.
That was a good lead into the next question we have for you.
Yeah.
Which is.
So for staff, you've heard a consensus, a majority that stay the course, move ahead with what you have.
I think that was
Yep.
my,
There we go. This next one is regarding the facility study. You've heard our presentation of the facility study, and we were planning on bringing some options to you for study or for funding that in this year, but we want to make sure that we touch base with you before doing that work, that this is a priority for you, for the council to move forward with this year
Yeah,
in 2016.
yeah, Mary, it is. Bill?
Yes.
Suzanne? Yeah, Dan?
Yes.
Yes, okay. You have unanimously, yes, we need to get this done.
Absolutely.
The next piece is related to one-time uses. We've talked about the first two many times, and as Ms. Fry indicated, we've used elections, we have an election next year, and we've used that in previous budgets. The newer one is kind of the first piece of a general fund piece of the comprehensive plan update. We will bring you more information on that, but that's one of those one-time pieces. And then a second entrance monument. And so generally we want to see if there's anything you want us to take off the list now, that we'll take it off the list. If there's any
It seems like we have a
questions that you have or
capacity.
additional information that you all want, let us know.
Well, it seems like we have the capacity in the unspent. And we should work with it. Mary?
I agree.
Yeah. Bill?
Even though I don't personally care one way or the other about an entrance monument, has been discussed as well in detail, so I will say
And
that.
people love it, and when the one on 13 went up, we got all
Even
kinds
though I
of
don't
emails and
personally
phone
care,
calls.
if
Yeah,
It was up to me, I wouldn't, but
yeah,
for the greater good, it's been discussed, so I
Yeah.
would say,
yeah, okay. Dan?
Is the 140, we're basically retaking up that
Yeah.
same decision every
Yeah.
year?
yes.
Yeah.
Five of,
Why do
yeah,
we keep seeing it?
yeah,
We're affirming
5 of 10.
Every year.
We're
5 of 10.
We're reaffirming the good decision we
That'd be the
made.
other
Yeah,
thing.
it's 5 of 10, it's 5 of 10, we're getting there, Dan. Yeah,
Yeah.
next year it'll be 6 of 10.
if you choose not to do this, that would mean you would have to
Yeah, that
increase
would
the
bump
levy.
Yeah. This
No,
is-
that's a decision
Yeah.
that we made long ago, and I still agree with it 100%.
Yeah.
In fact, I would like to expand on it.
Yeah.
To help pay for some of the other things that I think we're going to end up
Yeah.
doing.
And-
Elections, gee, has an impact on us. I think I would agree with this as long as we build back the comp plan to the Met Council. I think we haven't done enough to shove it back in their face for what they keep doing to us.
Okay.
And I agree with that.
Yeah,
Yeah.
monument sign, I have a lot of pride in the city, and I have
Yeah.
no problem with the monuments, and I want to see more of them done.
Yeah, thank you, yes. And Suzanne?
Now,
Okay,
that doesn't mean that you
I-
don't have pride, Bill. That's something that I feel.
Yeah,
I don't want to make that insinuation
Yeah.
to my friend, but
Okay.
I do
Yeah.
love that monument. I see him around the Twin Cities and communities,
Yeah.
and it reflects the spirit
pride.
and pride of the community.
Yeah.
It's amazing. I mean, our parks do that too, but the monument is what people see coming and going in our city along, if they don't see other things per se. And our lights. Our winter lights are talked about so often by people coming from out of town, out of state, out of the country, drive through Burnsville, and then call me up and tell me, that has got to be one of the most beautiful downtowns. I said, well, it's a pseudo downtown, but
It's okay
one of
if
the
they
most
think
beautiful areas with all those Christmas lights. And I said, yeah, and guess how it gets paid?
yeah, yeah.
Mr. Twinkly
Yeah.
Lights himself.
Yeah. So Heather and staff, I think you have direction to, yeah, Suzanne said yes. So it's unanimous. Move forward.
Thank you. The next two questions, really, the first one is there any particular services that you'd like to look at reducing to cut the current levy or future levies? There are some revenue things that we talked about in the all-day work session that are coming back to you for discussion in August, or July, actually. And so and there were some other different services that we were looking at as well, but just wanted to make sure that if there were any other things we should be looking at other than what we've already identified in the all-day work session, that you gave us a bit of a...
We've cut and cut and cut.
We did that many years ago.
2009.
Cut, then cut, then cut.
2009.
Yes, that was a long time ago.
Yeah. Well,
If I may
yeah,
add,
but we're trying to get out of it.
I think staff does a good job in eliminating things even without our direction. And I count on staff to continue that for looking ahead. I think they all know our general desire to hold the line as much as we can on taxes. So I have great confidence that if there is an area where services may be cut, that staff would point those out to us, or just do it.
Yeah. Yeah. Bill?
I'd ask you to do the same.
Yeah. Yeah. Suzanne?
I agree. I think our staff is always innovative and always looking to find new ways to streamline things and save taxpayer money. And I feel the same. I'm confident they will continue to do that.
Okay. Dan?
No comment.
Okay.
Okay, is there any additional information that would be helpful for your policy making, decision making in the next couple of months that you can think of generally?
Yeah. I'm looking around. It doesn't seem like there's any information. You give us information on an ongoing basis. And if there's any information that we need with regard to decision-making, I think you will hear about it, and it comes up in a work session, or else it's addressed in an amending a policy that we already have in place. But
Madam members of the council, to the comments that have been made, we will continue to look for efficiencies as we do. As we talked about last year, some of those are longer-term undertakings. At your next council meeting, you'll be talking about the new fleet system, for example, and that's one of the places where we're looking at getting a system in place so we get better data so that we look at the size of our fleet and whether we can save some additional resources there. And so we are continually doing that and are trying to get better at making sure we call your attention to that as we bring those decisions to you throughout the year as well. So we appreciate your confidence in us, and we will continue to do that. So.
thank you. Dan?
Can you do that to the tune of about $350,000?
Madam Mayor, Councilmember Keeley, we will continue to do our best.
Yeah. Okay. And our next discussion in the budget is July 14th. We'll look at revenue options. Okay. Thank you very much, Kelly and Heather and Dana and Steve and Eric and BJ and Jenny. Thank you so much for all the work that you all do. We appreciate it. And now we go to reports. And Michelle. Taking all the notes and making sure we have it all. So thank you, everybody. Bill, you have anything to report? Mary?
No, except that tomorrow's I-35W meeting, or Thursday's, the city of Savage will be giving a presentation about possibly reopening the bridge from, where is that point to point? The old bridge, the river crossing bridge.
Swing bridge.
The swing
The old
bridge.
swing bridge, which some of us who've been around for a long time remember when it was open to auto traffic and train traffic. And their pitch is that because when the I-35W bridge is being rebuilt, that would be help to relieve some of the traffic pressure, certainly not a lot or all. But it's a perfectly good bridge. So anyway, that will be interesting.
Okay. Suzanne? Dan?
I have a report from the Burnsville Community Foundation. Correct me if I miss anything. I still think you follow it so closely. Well, you've been very good about elaborating on things that
sometimes I hear things.
I don't indulge deeply enough. They amended their bylaws to mandate a little more strict attendance to board meetings, just, communication issue, no big deal. Sponsors coming in very healthy for the new sculpture. Encourage anyone, this is your normal play.
Yeah.
Encourage anyone to contact any board member of the Burnsville Community Foundation or go to the website to learn more about the sculpture and to donate. They're thinking about new revenue options, and I suggested just do what the Lions do. Get a pull tab and pull in the money and do some other things. And there's so much that goes into that they were a little adverse to taking on that.
It's a lot of work.
Large curve of work and regulatory and an employee.
It's a
and
lot
et
of
cetera.
work.
Yeah, it's a lot of work. So they came up with something a lot easier and working on a raffle at the lighting ceremony, a 50-50, a split the pot or something like that, and looking at making some blinking snowflake pins to go if you get the raffle, get a pin and get some tickets for the raffle. Mm-hmm. So some fun stuff. We did discuss pull tab, but it didn't really go too many places. But good meeting. Was it?
Okay. MLC, our Municipal Legislative Commission met. We met in Woodbury. Now, we have been meeting, and our meetings are always in a different city. We were up in Plymouth. We were up in Edina, and we were in Woodbury. And every one of these cities, their focus and where we met was in their community or their sports center. The Bielenberg Center in Woodbury, if you have not been there, is a gorgeous center. And I was reading an article about how when people are making decisions, younger families, where they go, they're looking at amenities for their children. What kind of recreational activities, what kind of facilities these communities have. Every one of those cities, whether it's Woodbury, Edina, Plymouth, Eden Prairie, are investing in all those kinds of things. And they gave a report about the Bielenberg facility and how it has served their community and so forth. So it was very interesting. When I left there, I thought about all of the cities that Heather and I go to when these meetings are held. And so it was very interesting. But there was not much to report because the legislature still hasn't finished their work with whether taxes or transportation or any of that. But they did have the chair of the Republican Party and the chair of the Democratic Party come and speak to us. Well, there was nothing much they can tell us other than everything that we already know that we've read in the paper. So we listened. They asked if we had questions. Nobody had questions, and that was it. And then we just focused on some of the things because there was not much to report on any of the other legislative actions. And so we looked at our agenda moving forward for preparing of a legislative agenda and also meeting with our legislators. And then, but that was it. And for the Regional Council of Mayors, we had our meeting yesterday, and we had the Kauffman Foundation come from Kansas City, and they reported to us on entrepreneurship and what's going on in our metropolitan region and how we stack up against the nation. So we're okay, but we have a lot of Fortune 500 companies, and when you look at where the jobs are created, in Minnesota, some of our companies have now created more jobs, but the majority of jobs are created with those entrepreneurs. But then they also see a lot of drop-offs that don't make it. So how do you help sustain that, and what are they needing in terms of what cities can do to help facilitate the enrichment of, or helping them, but not, they know that we can't give them money or anything like that, but can we help with permitting. And I said, most of us have a great process around all of that. But it was a very good meeting with the Kauffman Foundation, and we had a panel of our entrepreneurs in town speak to the issues of being an entrepreneur. And that was it, because, well, our meeting with Savage. Mary, you didn't report on our meeting with Savage.
Oh, no, I didn't. I forgot. You may do it.
Steve, you do it. Well, it was on water. It was updating on water and all of the.
Updates, we talked about the swing bridge.
Yeah.
The other updates were just related to the two cities are doing a joint water study. We have one in our CIP this year for the long-term water options for both cities. We're talking both with quarry in play and potentially post-quarry. So that's an ongoing another partnership that's going on with the cities. I think that's about it.
Yeah, that's about.
Yeah.
Oh, but it was good. And International Festival is moving right along. Raised some good money. We're doing good, money-wise. And so, July 12th. 11th. 11th. Yes,
July?
11th is Saturday.
So everyone
Yeah.
knows at home to put it on
Yeah.
the calendar.
Yeah, and so we're advertising at Paragon, so the ads are on now, and it continues to run. Let people know that about the International Festival. And that's it. Our meeting is coming up for the Convention and Visitors Bureau, and it's a retreat where we're going to look at our strategic plan and what we're going to be doing moving forward again. So that was all. Anything else, Heather? Michelle? Anything else? With nothing else, we stand adjourned. And you can get on the road right now. Yeah, he's gone. He's going up to the lake. Okay. Yeah. Okay. Drive safely.